Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 24, 2022. Let's talk about Netflix. As we all know, Netflix is a top entertainment website and they got great entertainment and movies and stock came tumbling down after the quarterly earnings. Let's take a look and see if it is good buying here. So with that, let's jump in and get started. We'll talk about competitive landscape, review a few charts, do a deep dive, look at a financial summary, and also rank Netflix, Disney, Comcast, Roku, Live Nation, and WWE, and then do a final verdict. So with that, let's jump in. As you see here, we got CEO Reed Hastings. He's doing a great job. Look at the approval rating. Employees approve, 94% of them approve. That's a great recognition here. I think Reed is doing very well. He's a great CEO. So with that, let's look at a few more details. As you see here, Netflix stock came tumbling down big time. Look, that's a huge drop here. Even up here, it's a moderate buy rating from analysts. And we also had an analyst upgrade. So that's a good story here. Stock is after the tumble here, stock is around $397 and market cap came tumbling down. It's $176 billion. Even up here, I think it's a good buy here. I like the company. So what's going on here? Look, Netflix crashes 22%. Folks freaked out here. Netflix typically is known for under promise and over deliver. They did a nice quarter, but they gave some softer projections for next quarter and also some deceleration in growth. That's why stock came tumbling down. Look, they talked about subscriber growth coming down slightly. That's why Wall Street did not like it. Stock came tumbling down here. Look, huge big drop here, 110% down in one day. That's a very huge drop. It's one of the biggest since 2014. So with that, let's see if it's worth buying here. As you see here, from a projection perspective, still we are looking at a higher projection of about 750. That's a good one here. Even the lower projection is above current stock price, and we got here lowest projection, which is slightly below. Look, right now there is a fear in the market. It's a sell at this time. I think that's when we start buying the stock slowly. I think it's a great one here. Reed Hastings is a great CEO. He's going to turn this ship around. So with that, let's jump in here. So from a competitive landscape perspective, look, we got Netflix up here at the top here. Even after this huge drop, look, they've done 187% in 5 years. That's a very good performance. And look, they got a very good financial position here. Grade A, growth is grade B, and profitability is grade B. From a Morningstar perspective, these guys are still top dogs with top-notch rating here. I think that's a good one here. Then we got Walt Disney here. Disney, as many of you know, look, Disney right now is it's done about 34% in 5 years. Clearly, Netflix is much better investment, and Disney gets a little bit lower rating than Netflix, as you can see here. So that's why it's a good one to look at. Netflix is a good one here. And then you got Comcast and few others. But look, I think Netflix is great here with the nice rating here. I think we should take advantage of this opportunity. And we got few more here. Look, we got DLB here. This also does pretty okay, as you can see here. Performance is not as great, but it's done okay in 5 years. And then you got WWE. Many of you like this channel, I know. Look, it's done okay. It's got a grade B in financials and grade A in profitability. Company is making money. You could look at that one too. So with that, let's jump in and get started. All right, so let's look at a few more details and look at the competitive landscape. As you see here, we got Netflix. Look, huge, big drop here. And right now on the balance, volume is also down and stock is squarely in the negative territory. It's in a bearish territory. RSI came tumbling down. I have not seen such a low RSI in a long time. That's why there is a blood in the market. We should jump in and buy some Netflix here. And look, Disney also came tumbling down. This is also a good buy here. It's a reopening play. They got movies, they got park. It's a good one to buy up here. And then you got Comcast. It also came down slightly. It's also a good one in the longer term. And we got Roku. Roku is coming down, as you can see here. You got to be a little careful on Roku here. So you could, buy a little bit, but looks like it's having some tough time off late. And then we got a few more, as you can see here. Look, we got Live Nation. This is a better play here. You could buy some Live Nation. It also came down, as you can see here. On the balance volume is stable. You could buy some. It's a reopening play, as many of you know here. Warner Media, it's also doing okay. It also came down here. You could buy this one also. And WWE is a good one here. You could take advantage and buy some WWE. Look at the on the balance volume, pretty stable here. And then finally we got DLB here, came tumbling down. On the balance volume is pretty stable here. You could buy some DLB also here. So with that, let's jump in here, look at Netflix and do a deep dive. As you see here, Netflix earnings per share growing. That's a very good sign. I like it. It's an annual, as you can see here. And sales is also growing. That's also a good story. Top line is good here. Shares outstanding is constant. They are not diluting their share count. That's also great here. From a quarterly revenue perspective, it's also growing nicely. That's very good. I think that's a good one here. And R&D investments is also going nicely. They are really improving their website and their application. I think that's a very good one. I like the companies growing R&D investments to keep their product top notch. On the quarterly net income, look, there is this drop here. That's why Wall Street does not like this too much. This is our time to buy slowly and go from there. Now let's look at the quarterly earnings result here. The latest one is not here. It's still being crunched, as you can see here. But look, the theme is we got a huge drop, as you can see here, 35% drop in the latest after the latest quarterly earnings. I think this is where we got to see if we can buy here. And as you see here, it did 16% last quarter. On the quarterly basis, off late, it's struggling a little bit, as you can see here. But sales is pretty good, as you see here. Nice sales growth. That's a good one here. They're also surprising Wall Street with the EPS surprise. That's also good here. And they do have nice gross margin, as you can see here. That's also great. It's slightly coming down, but still great here. Company spending money on R&D. That's good. Net margin positive. Company is making money. It's not a money loser. It's also improving, as you can see here. And as you see here, they're doing pretty well. Price to sales perspective, it's not very expensive. Overall, I like this company. It's a good one, especially after this huge drop here. Look, 35% drop from a quarterly basis. I would be a buyer of Netflix up here. So with that, let's jump in and look at the yearly performance. As you see here, from a yearly performance, company has been doing nicely, as you can see here, all up positive earnings, and latest one is negative, as you can see here. Back in 2014, as you see here, it had a negative performance, as you can see here. And now I think we are back to the same story. Look, 2011, again, a huge 60% drop. And look, 2004, I know it's a very, very, very long time ago, 54% drop. What I'm trying to tell is really Netflix is known for these drops from time to time. As you can see here, 1, 2, 3 and 4 big drops. Last two are big drops here. And with the Reed Hastings at the helm, they're really reinventing themselves. So I'm not worried. It's a great, great buying opportunity. So with that, let's look at the chart here. This is a 5-year weekly chart, as you can see. Look, stock has been coming down in some times, as you can see here. Look, drop number 1. This is back in 2018-19 time frame when J. Paul increased the rates. Drop 2, and we got huge big drop here. That's why right now we are below 200 week moving average. I think it's a very good opportunity. Netflix is a solid company. They want to under promise and over deliver. And now let's look at the daily chart here. As you look through daily chart here, again, same story, huge big drop here. Look, RSI is completely down here. This is the lowest I've seen in a long time. As you can see here, RSI is 10, completely sold off here. Look at the distance between the blue line and the red line. This is the one of the highest I've seen in a long time. Completely bearish, as you can see here. On the balance volume, tells you more sellers. And check-in money, look at the check-in money flow. Smart money is now flowing into the stock. That's a good sign here. So I will be going along with the smart money here, buy some Netflix after this huge big drop here. And now let's look at the option chain. As you can see here, stock price is around 397. Look at the drop here, huge drop here. And as you can see here, from a option chain perspective, at the current price around $400, we got 159 contracts. Look, there are a lot of people buying options contract at 485, got healthy volume here. So with that, as you look through put side of the house, there is also good open interest here. Let's see the option statistics and see what's going on. Is more bearish? Is it more bearish or bullish? So as you can see here from an option statistics perspective, look, we got total 851 call contracts traded and 700 put contracts traded. That makes the put call ratio 0.929. That's below 1. That's why even up here it's bullish, but folks are also buying put options to hedge themselves. Look at the volatility here, huge big increase in the volatility because of the earnings, but it tapers off, as you can see here afterwards. So with that, as you look through here, let's compare Netflix, Disney, Roku, Live Nation, and WWE. As you see here, we got comparison here. From an analyst recommendation perspective, all these companies are in a buy rating right now. And as you see here, Netflix is now not the biggest market cap. Disney is the biggest market cap here. And then we got here Comcast, and then next is Netflix. And as you look through here from a target price perspective, Netflix still has a nice target price here, 663. That's a good one here. And as you scan through here, gross margin perspective, Netflix is doing well, 44% gross margin, and Comcast is doing great, as you can see here. And from a PE ratio perspective, Netflix is a little expensive, but not as expensive as Disney or even Roku, as you can see here. From a financial grade perspective, from an Altman Z-score perspective, which tells you the financial stability, this gets the one of the top rating here, 6.5. That's a very good rating here. Company is very solvent. And look at the financial grade here from Morningstar, all great grade in the financial growth and profitability, top-notch grade here. Overall score is 81. So this is one of the highest, similar to Comcast here. So with that, I think it's a great buy. And as you can see here, Roku gets a little bit lower, 66 here, and the lowest score goes to LYV here, Live Nation. So that's why, even after this huge drop, as you can see here, Netflix still gets the highest rating here, highest overall rating. It's doing pretty well. I'm a buyer of this company, even up here. So with that, you might wonder, what should I do now? As you can see here, huge drop, but stock, company did well. They did a nice earning beat from a revenue perspective as well as earnings per share perspective. Investors are giving up on this stock right now because it's raising its price. It's raising its price. There is some concern around that, but with the subscriber growth slowing, it's a good story. Netflix plunged more than 20% in one day, biggest drop since October 2014. I think this is where there is some fear about streaming, subscriber growth slow here. So that's why stock came tumbling down. And as you can see here, it also expects deceleration, further deceleration in the first quarter. And they also provide a disappointing outlook. That's why stock came down and massive sell-off. On the positive side, as you can see here, they're expanding into mobile gaming. That's a good one here. I think this will be a good head tailwind for the company. They will continue to do well. They're also, they have a great content, as you know, a lot of original content. So, in a nutshell, Netflix is under promising and over delivering at this time. That's a very good long term. Right now, in the short term, it's really fire. It's not a great position. But when the stock sells off like this, since the fundamentals are strong, I recommend a moderate buy on the pullbacks. Netflix is great, and Reed Hastings is a very able CEO. He will steer the ship. So with that, I recommend moderate buy. Thank you very much. Happy investing and trading. Please subscribe.